at all. I think it was widely anticipated by the market. I think what was a surprise to us was just how aggressively the 2018 growth forecast has been revised lower. So they've moved that from 1.7 to 1.2%. And the inflation trajectory is actually predicted to be somewhat higher, especially with the QPM model, which now predicts 5 increases to 2020 rather than 4.
That's a huge jump, and I mean, we'll unpack all of it. But Viv, that drop down in growth from an expected 1.7% to 1.2% is just a clear indication of the times we kind of live in. Everything from price increases as well playing its part.
And this is something we've seen the trend, or this is a trend we've seen for several years. We always are very optimistic about 2 years from now. Next year is not as bad as this year, but this year is worse than we expected. And that's been the trend for several years. We always have very optimistic growth rates in like 2 years, 3 years, and then as we get close to that point, we fail to execute. And I bring this point up a couple of times when I talk about South Africa. We have this optimism about the growth rate in South Africa being better without Zuma. Okay, that's the clear indication. And you look at the BRICS countries, you'd find that there's a couple of people in the BRICS region that are more corrupt than us.
Yes.
Russia, Brazil, China. But the growth rates of those countries don't seem to be correlated to their level of corruption. China, where the president effectively took over the country through a bloodless coup in the last year or so, grows at 6-7% a year whenever they want to. We in South Africa have issues beyond corruption, and that's something that the government has to really attack.
Looking at all the inflation numbers themselves, 4.8% is the expected elevation or average for inflation in 2018, Jason. 5.6% that peak in 2019, with a peak within the first and second quarter of 2019 of around 5.7%. It is edging ever closer. Do you think there were inclinations of a hike, or was it just never a thought process?
I don't think it was really part of the thought process. If you look at how the numbers have shifted out much closer to the 5.7 or the 6% level that they want to keep it below, I think there's still enough time to play with, especially in the context of such a weak economy. You don't want to be raising interest rates at the moment. That's going to stifle the growth that we need. I mean, we saw the 2.2% contraction in the first quarter. Second quarter looks like there's going to be a very small bump at best. So I think while mindful of higher inflation, certainly towards the outer years, they're doing their best at the moment to try and be accommodative for growth.
It is a change in the trajectory, however, despite the fact that yesterday's number came in at 4.6%. And I want us to perhaps just unpack the fact that the past number doesn't really matter as much as the negotiations of price increases, for instance, of wage increases for workers as well. So that is the real effect, not necessarily yesterday's CPI number, which came in better than expected.
Correct, but we need to take into account of how much of that wage price spiral that the governor mentions is going to feed into the real economy and to consumption. So far, we haven't seen that. We've had pretty decent real wage growth, and we're now seeing well above inflation settlements within the public sector. We still are not sure that that's going to feed the consumption cycle and therefore inflation. All of the inflation pressures that we're seeing at the moment are coming from the rand-sensitive and oil-sensitive price component of transport. And raising the interest rates isn't going to change that. There's very weak domestic demand if you look at the underlying factors within the CPI basket.
11 minutes, Viv. That's how long the governor took this time around. It's probably one of the shortest speeches I've certainly covered from the Reserve Bank governor with regards to the MPC announcement as well. The rand depreciating 7.2%, that must be probably one of the most important risks coming out of this as well.
And I think that's also one of the reasons that he's basically, it's a lot of jaw, not a lot of raise, to paraphrase Winston Churchill. So the Reserve Bank basically needs to get the impression out there that we are eager and ready to raise rates as soon as we see a start of inflation in order to preserve the value of the currency at the moment.
Did they send that message out? Do you think they sent that message clearly saying that we will, however, move no matter what the situation is if things get to a point where we need to?
Yeah, I think they did. I mean, they talked the fact that they've increased the number of expected raises, the fact that they said they look at the risk to the upside, etc. Those things, I think, do give the impression that they would be willing, and this is something it's what they can do without actually doing anything. You know what I mean? And this is something that it's one of the tools in the basket for a Reserve Bank. The US especially used that very, very well during the Yellen years, where she did nothing for a long time, but it made the market market expect her to do something, and that caused the effect that she wanted to occur. Whether or not we can do anything about the currency, it's very difficult. The fear we have at the moment is that, you know, what happens in China, where they've had the yuan decrease in value, and they said, no, we didn't cause that to happen, but should things happen, there's a kind of a hint that this is the thing that they could take out of the arrow they can take out of the quiver, should anything go too badly against them with regards to trade negotiations. When we get into a situation where currencies are being used as weapons, we in South Africa don't have the ability, the firepower to fire back in any way. We become like a leaf in the storm, basically, and we'll be fluctuating up and down, and that's very dangerous for a country like South Africa, because not just the level, but also the volatility, it makes a huge impact on our economy.
Yeah. Do you think they started this MPC thinking to themselves, if we give another price increase, we stifle growth even further, knowing that in our model we see growth of 1.2% for 2018?
Oh yeah, look, I mean, they definitely don't want to raise rates in this environment here. This makes no sense in our economy. And like what was mentioned before, these inflation figures are coming from external factors, imported numbers, the rand, etc. Of course, there's obviously internal things such as the wage number. But I don't think the wages figure would change too much if interest rates were higher, because it's public sector wages. Yeah. It's not a company that has to cut down on employment just because it has a higher interest bill. So to a certain extent, they don't want to raise interest rates because it won't make a difference to the actual factors that are affecting us at the moment. At the same time, in terms of the inflation rate, but at the same time, they can't raise it because of the fact that the growth rate in the country, like you said, is so low, and we haven't seen a real reason or real breakout from the 1%, sub 1% kind of growth rate we've seen for the last little while.
Jason, does that affect their credibility then?
No, not at all. I think they've been communicating the message quite consistently. I think there have been global factors that may have swayed the view somewhat, but I think their message is clear and consistent, that they remain vigilant, and that they're also mindful of growth. So I don't believe there's been any inconsistency in the communication.
Yeah, they're going to have to keep up this messaging, though, to be very clear, to really just say to the nation that no matter what happens, however, we will try to protect the currency as much as possible, but we certainly can't do anything further than this. Now, I want to talk about a historical matter, if I can, for a split second, before I actually go to the parity with which the rand is undervalued, etc. Is the unions used to call on to the president and say, you need to do something about South Africa's currency. And at that point in time, if I could remember correctly, the Reserve Bank said, look, we're not going to get involved, but we have a fear if it touches 16. We did see that mark at some stage, and they didn't necessarily step in. But do you think there's going to come a point in time where the South African Reserve Bank may have to step in to see and make sure that the currency does not move too far ahead of itself?
I think we've tried it once before and we've got badly burnt. Yeah. I think their primary mandate is price stability. And if you think about South Africa as the small open economy that the governor was talking about, and the massive current account deficit that we have, it was very disappointing in the first quarter. We're essentially at the mercy of foreign portfolio inflows. And it's been emerging market risk off at the moment, and we've seen significant bond and equity outflows, and that's caused currency weakness, but it's also a lot of dollar strength. I think we underestimate just how important dollar strength has been in this equation.
Yeah. At the same time, talking about undervaluation of the rand there, Jason, around 1330 or so for the rand against the US dollar, but it was at 1237 in the previous meeting. So the question then would become, yes, undervalued, but by how much? The Big Mac index seems to suggest we should be at 5 rand 83, but that's surely too far down the line.
Look, I think there's a lot of risk that's being priced into the currency at the moment. As you said, it was 1244. At the last meeting around that point. So we've lost a rand almost between the last meeting. But counter to that, we've actually seen the oil price retreat. The oil price was around $79 a barrel at the previous meeting, and it's now trading at 72. Those are both risks, and I don't think the Reserve Bank can control for either one of them, especially given that we have such a yawning current account. What we have seen, and what I think the market will eventually start pricing in once they start to see action, is that the president has managed to get assurances of significant amounts of foreign direct investment, and that's going to start feeding through into better price stability within the range.
Yeah. A quick update as well on what the currency is doing against the US dollar. It's down 1.6%, so a weakening of 1.6% today thus far. It's at 13 rand and 47 cents. It's 15 rand 64 for a single euro as well. That's down 1.25%, with the British pound setting you back 17 rand and 50 50 cents rather. That's nearly 1% weaker at the same time as well. Viv, let's talk about that oil price that Jason just mentioned as well. Big fluctuations happening, but we don't seem to be passing $80 a barrel. But at the same time, we don't seem to break beyond that $70 a barrel either. Should we be worried?
Oh yeah, we should be worried. There's a number of factors in the oil market that are very scary. Notably, the disagreement between the US and Iran is number one. The concerns around what's happening in Libya, and I mean also another factor there is the food price number that he said he doesn't see any upside risk from. And I mean, I think that's something that people need to be considering, the fact that the weather now is not as certain as it used to be in the past. And food prices are driven by the weather. And we can't see till 2020 and see what the weather is going to be like. We don't have 2020 vision. But quite frankly, these factors are things that are just out of our control, and no one can predict these things, and certainly not the Reserve Bank governor, because the fact of the matter is that oil prices could spike up to $100 plus a barrel should we have a blowout in the Middle East, should we have weather patterns going crazy, or inflation will come back tremendously with regards to food inflation, and that's something that we have to do something about. And so we really can't, for certain, know these things in advance. But look at the oil price. Trump has made a move, and we've got to talk about him for a second here, where he's basically pressured OPEC with regards to the amount that they're producing at the moment. And he has a bit of currency with OPEC for a very bad reason. The reason is that the Saudis right now are doing some terrible things in Yemen, and they don't want anyone in the world to talk about it. And therefore, when they get pressure from the US, they are willing to basically accede to things, unlike they were maybe a few decades ago with the original oil crises that we had. So we might just see some relief come there and some protection around the $80 barrel level.
Sure. Gentlemen, we're going to continue the discussion in just a bit, but of course the breaking news right now, South African Reserve Bank choosing to keep interest rates unchanged at 6.5% for the repo rate and 10% for the prime lending rate. Will continue with our look at the Monetary Policy Committee's decision right after this. Do stay with us.